Good evening. This is the Elliott wave update for the NASDAQ 100 and the S&P 500 for Thursday, June the 8th, 2023. Almost forgot what day it was. And I'm going to start here with the NASDAQ. We're going to start in the hourly chart. And as you can see, I've taken off all the lines. And so I had somebody comment on it yesterday, and it's not that I agreed with them. I just decided that I needed to show the picture. So as I update, I will also detail how I build where my next resistance levels and where expectations for now, what I believe to be the minor fifth wave here in the NASDAQ is underway, and where are the levels that this can likely reach. And because it will be an important top, by the way. So let's get started. I am going to put down and put the minor wave 4 being complete today at, I believe it was, we're going to just double check, 14,256.75, and I'm pretty sure that that was the low. Yes, it was. So 256.75 being the low for minor wave 4. And then I believe I'm just going to open this up so we can take a look at some of our details. 1, 2, 3, 4, 5. Just barely, but it did get there. Maybe we're just going to do a 2, and we're going to rally a little bit to get kick-starting here in the Globex session, yet to be determined. So if we've done first 5 up, that gives me some confirmation that we likely have completed the very first wave of the minor fifth wave. You have to be determined whether it's going to be minute or if it's a minuet. So we've got a couple of layers that we can build on this, and we now need to allow the market to do so. So that being the case, let me just go back out to this 4-hour very quickly and begin to show, yep, we're still in that C wave up. We got 1, 2, 3, 4. Now we have something to work with, trying to determine what and how high could minor wave 5 get. So first thing I'm going to put in there is I'm going to put in the fibs for minor 5 as it relates to minor wave 1. So remember, under Elliott, he left for us the conversation that when we're comparing the minor fifth wave, its most closest relative is going to be wave 1. So what are those relationships? At wave 5 could be 0.618 of wave 1. That's not the most common. The most common is that minor wave 5 is equal to wave 1. So it's 100% of wave 1. So now we can pull this down a little bit, and we're going to see, where is that level? Wow. 15,529. 15,506 is where we are. It's 1,000 points from here. That's a lot. So can the market do that? Yeah, it can. Technically, we're including this. It can most definitively do just that. So that would be where wave 5 would be equal to wave 1. What comes up next? Well, is that wave 5 will be equal to 0.618 of wave 1, and that's down here at 15,043. So what do we have in between those two? We'll continue to present resistance, and the reality is that if we get our 5 waves, and then we get, so this being the first, but we get 2, 3, 4, and 5, if it only gets up to here, but we get to complete that, and it all fits within the structure so that everything kind of equals out and it's a decent structure, then it does not necessarily have to get all the way up to 0.618 or even to equality. Those we use as fib attachments to an Elliott count because of the relationship between wave 5 and wave 1. Now, essentially what we look for is for wave 5 to put in a new high above wave 3. Right now, that high is 14,692. It might be a little bit higher, actually. I thought it was like closer to 94, 95. No, it's going to be 92. That's where we're going to leave it. So 14,692, 94.75. There you go. So anything above that, and it completes the pattern, then we can take that as the high. Now, I'm not necessarily looking for that. I am looking for 0.618 or 1%, or pull it all the way down. There's the 1.618 is at 16,320. Now, that might seem like, wow, that's so high. If you're bullish, you've been holding a long position, you're like, yay, you're going to cheer it on. If you were short or you're trying to build a short, you're not going to be very happy with that. But here's the key. You just got to keep trading. You have to keep trading. Because here's the other thing that I'm going to tell you about is that not only is this a minor wave 5, it's completing an intermediate wave C, which is completing a primary wave B. Now, I've just given you the whole count. I know I repeat myself, but these are important levels. So now I want to open this chart up a little bit. There's our basic one. Now we're just for the move that we have at hand. And we will be able to build on this initial fib level for minor wave 5 as minor wave 5 continues to unfold. So if we have indeed completed that first layer, then we can drop and put in fibs to work out what a pullback should look like. And then once that's done, we can do additional extensions to what wave 3 should look like. Then we can take from wave 3, we can do what wave 4 should be against wave 3. We have the fibs that are related on each one of those moves. And then again, we have one more that once we do have that wave 4 in, we can then now talk minute wave 1 to minute wave 5. Just like we did on the minor degree, we can do it again on the minute degree. So we continue to build our levels of where we're going to hone in on where we would look for this move to complete. Now, building into that, I want to take a look at what else is going to be important here. If we're finishing this, and that's going to then finish an intermediate C wave, what are the limitations or the expectations for this intermediate C wave? Well, we've had those for a long time. Again, we're going to be just putting in fib extensions, and those are going to be right there to right here. So here we have for wave C. Well, wave C, basically, I can clean that up and take a lot of this out so I can get rid of some of those lines. And I'm going to do that right now. So I just, instead of doing it, I removed it. Excuse me for that. Give me 1 second while I put that back up. And I want to do it, and I want to edit the properties. So I don't need 236, 6 and that, but I'll leave the 618 because that's important. I'll leave the 1. I don't need 236, 382. I need 1.618. Get rid of that. I'm going to put in 2.618 and put that right in the correct color. And I don't need 2382 right now, so I'm going to leave that off. And so we can get this all together. So what do we have? Well, we have wave C. Look at where it comes in. Wave C would be 1.618 times the length of wave A, right where minor wave 5 would be 100% of minor wave 1. All in the same. We got a little cluster right there. 15,529 to 15,598. Okay, first cluster kind of starts to build. Gee, what can we expect? Well, that's one area. Okay, now I'm going to add again to one more level, and this one I got to go out to my weekly chart because now we have primary wave B, right? So I've gone up the levels. Minor wave 5, that completes intermediate wave C. We got that together. Intermediate wave C, when it's complete, is going to be completing primary wave B. So where are those? Those we're going to use retracements. And so we're going to go from this high, the all-time high, down to that low in October, and bing, 100%, where wave C would equal wave A as at 16,767.50, which is the all-time high. Now, more likely, we've already shot through the 618, right? Because we're trading above 14,340. We're at 14,508. So we went through that. So what is our next that we have? Well, we have 14,914, which is 0.70, 70.5%. That is not an Elliott Fibonacci, but it is a useful Fibonacci. And again, I will just tell you I got this from old SPX market makers when there was an SPX futures trading on the trading floor of the Chicago Mercantile Exchange. It is a level that they used religiously. And again, so I'm including it because it still fits. And so now we've got all of the fibs, and they're going to say all those lines on the chart. But now I'm going to show you how you put them together to use them. We are trying to find clusters of where this market can go. So I'm off that weekly. I'm going to go back down to the 4-hour chart, and you'll see we start to get clusters right on that 7-0. 14,914. We've got 14,891, which is where I'm going to bring it back down. So, okay. So here we go. Minor wave 5 would be 50% of minor wave 1 at 14,893. We have the 70.5 for primary wave B at 14,914. What we don't have is anywhere for the C wave. We got the 618, and our next one up on the C wave is 100%. So we have to, let me just take this out. Hold on. I confuse myself sometimes. These are right here. So the 100%, and then it's 1.618. So it's way up here. But we have the C wave and, excuse me, the primary B wave at 14,914. And what we have matching up with that, coming back down here, is the 50% for minor wave 5. So it's a valid. We have a little bit of a cluster, we would call it right there. Then we have the 618, where minor wave 5 would be 618 of minor wave 1 at 15,043. And I probably can clean this up a little bit, to be honest with you. And let me go in there, because we don't need the 786 people try to use, and I am not necessarily in agreement with them on that one. I'm going to leave that one. And that, and that, and that, and that. And get rid of that and fix this one to be 2.618, which is going to be a pretty high. But you never know, so I'm going to put it. So that's going to be sitting up there. So now I cleaned it up. So we know that what we got going on here is 382. We got the 50% up. Take it back. I screwed that up. I do want to leave those lower ones in because they can show up because they're above this market. So with 14,742 is 382. It does create a new high, but our clusters come in a little bit higher, and that's where that 50%. And then we have our 618 for minor 5, 70.5 for minor 5. But then again, our first that we want to look at is that minor 5 will be equal to minor 1, and that's it right up here. And we have the 1.618, excuse me, coming in as well. And so that all fits and works very cleanly and nicely. So we'll continue to build on that, but that's kind of where we're going to start. These are our starting points. So I am looking for the rally. I'm looking for the rally to pick up. But again, it's going to be a 5-wave structure. So being that it's going to be a 5-wave structure, what we're going to be looking for is for that to form. We have 5 waves all coming through in many different areas. But this is on a minor degree. Well, there was, and let me just pull this out so you can see what we're comparing it to. There was minor 1. Minor 1 was 13,084, 11,000. So it was over. Let's just do the math. That top was 13,082. And this all started at this low. Oops. Yeah. And that low was 11,806. So it's 1,276 points. And that's what our fibs are going to be based on, 1,276 points. And that's where we get that 100, the 100% number, because we're adding it at such a high level. Okay, so you can figure that's where all these come in. So it's quite the climb that the market can do. Does it not necessarily have to? We still have a lot of things coming up that are going to have an effect on this market, the largest being next Wednesday, which is the Fed. And if the Fed comes with a pause and the market wants to interpret that as the best thing since sliced bread, then yes, this market has every intent in my mind of going above 15,000. How does that fit into our larger picture? Well, we've already got that covered. Look at the fibs that have been in place since the October low. They've always been there. They've always been a possibility. We had to wait for the rest of this whole move to begin to lay itself out so we could map it along the way. And there were many bumps and there were many grinds and there were many problems in between. So yes, there's been a lot going on, and now finally we're in the ending stages of it. So there's going to be a lot of talk telling us, no, doom bull market, we're going. And to keep it in mind. Okay. Now, moving average wise, yep, all beginning to now kind of like straighten themselves out. That's the daily, still looking good. The hourly, we did get that downdraft. Now it turned, and we now got at least the 20 heading up. The 50 turned from the higher level. We got the 8 and the 4 above that 50 now. As you can see right there, the 20 is getting ready, and the 200 is starting to curve, curl, and point higher. So things are falling back into line in terms of the rally continuing. Okay, so same deal. Here we have, but this is still going to try to form this diagonal triangle. So what we can do is I'm going to take this out right now and replace it, because what we want to do is put wave 2 to wave 4 now. Now you've got that wedge going. 2 and 4. This was the center of of wave 3. So we connect them this way. ABC looks pretty good. We're getting a little pullback here. Let me open that up so we can take a peek. Is it the same? 1, 2, 3, 4, 5? I would say so. This did not take out this low. If not, then yeah, I'm pretty satisfied with that low to this low. That's 62.75 versus 64.50. So I'm going to leave it as a 1, 2, 3, 4, 5. A little 5-wave structure to give us that announcement. Put the 4 in there, be okay with it, and let the market build. And now we have our bottom, the boundary of the triangle, and where it meets up with the wave 4. So initially, we're going to be looking for an ABC. So it's going to be a little bit different pattern than we're going to see in the NASDAQ. The NASDAQ is not working in a triangle. The NASDAQ, in my opinion, is working in a straight 5 ways up. The S&P, on the other hand, is working a triangle pattern, and it's a diagonal, and it's right here. So you can see wave 1, wave 2, wave 3, wave 4. So we're needing 5 to be 3 waves up. Now, if that pulls out to here, then we're up around that 43.30 level. It can cruise and go above it and come right back. So in other words, it's like it exceeds the limit or the boundary and falls right back below it. That's not so unusual for a triangle pattern. Most of the time in a diagonal, they tend to stick to the boundaries or the channel lines for the triangle pattern. And in this case, we have to keep moving it out as this unfolds, right? So we can move higher. We got 43.30, then we can go up to 43.38, and et cetera, et cetera. Now, let's start to just put some basic in, right? Now, we can do this for minute wave 5, but I'm looking for minute wave 5 to be a triangle. So in essence, what we're really thinking is that 5 should be 0.382 or thereabouts of wave 3. I'm going to connect it to wave 1. We're going to look at just a little differently. 43.25, 0.382, ABC, 0.382. If it goes above, we have 43.45. It really goes the distance, it can go to 43.64. We have this outside, and again, I believe that one, coming out to my daily, these are the primary B wave. Primary B wave has got 4,400, pretty much on the nose. So let me go back down. Pull this open. There's your 618, 4,400. Can it spike up and come back? It can. People are going to scream at me because of the triangle pattern, but I just don't know. So for me to say absolutely not, it can. It'll break the triangle. It's like it may just do that and then die. So, who's to say? But we have resistance all the way up. We will continue to build our cluster, but then in keeping with the triangle pattern, we'd be looking for it to come in here, here, or here. And then, so spike up and spike back down. That would be my thought. So wave 1 has got us back to 43.01. I can tell you already, and this has nothing to do with Elliott, but that 4,300 level up to 43.12, 13 was today, whether it'll be tomorrow, I don't know, was being very, very heavily defended by sell orders stacked from 42.96 all the way up, stacked. At last count I saw, there was approximately 1,900, almost 2,000 contracts stacked to sell. So, but they worked their way through 96, 97, 98, 99, and 4,300. So they got up there and they played around up there, and then it came back down. And now they opened it a little bit lower. Now they're going to maybe try to push it higher. It should, but we still have an A, B, and a C. So we have the A, we probably should do a B, and again, it's going to be opposite because we'll just be looking for a wave 2, and then a wave 3 in the NASDAQ should be way more powerful than what we'll see here in the S&P. So again, it may present us with a challenging picture if we get a lot of the NASDAQ stocks like NVIDIA, Netflix, et cetera, just continuing to take off, Microsoft continuing to take off, Apple continuing to take off, then the S&P is going to go. Those are heavily weighted stocks in the S&P as they are in the NASDAQ. So we need to stay focused on what the market is doing and what our levels are versus the triangle restrictions being placed on by many people. It can break. It's holding it right now, but you can see it kind of drifted below, came back above. Because we were working this, we drew this after. So it became easier, right? So again, minute wave 5 projects 100% is 44.27. And it could be a blow off. That is also not unusual for the market to end in that fashion, particularly in a move that has gotten so much hype like this one, and also started at the October lows. So this started at 3,500. And now we're staring down possibility of a 900-point run to finish at 4,400. Yet to be seen. Now, for tomorrow, we could get a pullback. And again, it's just going to be, I don't need to see all that. It's just going to be how all this plays out. If this is A, B, or just 1, 2, 3, 4, 5, for wave A of 5, or wave 1 of 5, and then we get a 2 of 5, a 3 of 5, a 4 of 5. I mean, you still could put in 5 waves, but we're looking for like a 5, 3, 5. 5, 3, 5. 5, 3, and another 5. So it's going to get interesting. Now, there's some people that probably don't think that that's wave 3, but I'm labeling because it turned into a 5 as a 5, and so it's an ABC for wave 3. It's in a triangle. So we'll see, because I can do it totally differently. I can do 1, 2, 3, 4, 5. Now, there's a whole bunch of things that you can put in here. I can put this is wave 3, wave 4, wave 5, 1, 2. I can turn it into a 5. I'm leaving it here so that it's cleaner. And again, so there you have it. Moving averages starting to follow through. We have the 20 crossing back above the 50, which was good today. We have the 200s. They're still angling up, but they'll probably start to turn a little bit more. I don't suspect they're going to get too crazy because it's a triangle. So it'll be very limited, I think, as we get up here. It's going to be very, very, very heavily defended. Now, remember, at the end of June, we do have JP Morgan's collar, the big collar that they roll once a quarter. And so the expectation is they will roll this one as well, because it's used to hedge one of their hedge funds. So that's at 43.20. The call side is at 43.20. The puts are below. So we'll see. Now, a lot of people want to speculate around that, but it should provide a pretty strong, what we would call a call wall. That above that level could force a lot of readjusting. So a lot of quick moves, which could force the market even higher. So again, we got a lot coming up. That's not till the end of the month, the last day to be exact. But how they want to trade it and talk about it between now and then to be seen. As well as we've got the Fed next Wednesday, and their decision is definitively going to have a big play in our equity market, along with the bond market. But here, specifically, it's going to have a very large impact, no matter what comes out. If they're going to hike quarter of a point or 25 basis points, we're going to turn it, hightail it lower. If they pause, we'll likely have an immediate reaction of, oh, we love it, and they pop. Doesn't mean the pop's going to hold. This means that they're likely going to do it. Okay, I'm going to end it there. Next update will be actually on Sunday, 9, 10, 11. That's on June the 11th. Have a great trading day tomorrow. Also have a great weekend. Talk to you all on Sunday.